Hey, what's up YouTube? Welcome back to another awesome episode. In today's video, we're doing something a little bit different. And it's a new type of video that I want to try out on the channel. And I might do more of these if you guys really enjoy this type of content. But essentially what I want to do is update you guys with what happened in the markets for that month, kind of give you a little synopsis of everything that went down, and more importantly, give you the absolute highlights of everything that happened for that month or for that week. And to let me know that you guys really like this type of content, make sure you like the video down in the comment section below, and also leave me a comment that you like this type of content. In today's episode, we're gonna talk about everything from Bitcoin to inflation to the new IPOs and much more. So hopefully you guys enjoy this one. If you do, feel free to share it on any social media that you like to use, or even better, share it with a friend. And without any further ado, let's dive into today's video. Let's go. All right, first we want to talk about Bitcoin, because China and Elon Musk have made a little bit of a fuss about Bitcoin's energy use. And in fact, in May, Elon tweeted this out. If you don't remember, Tesla has suspended vehicle purchasing using Bitcoin, et cetera, et cetera. They're concerned about how much energy Bitcoin uses. He says that cryptocurrencies is a good idea on many levels, and they're also going to look into other sustainable tokens, right? So that is something that was pretty big deal. And of course, knowing Elon, he likes to show other things that he believes in more, and that happens to be Dogecoin. If you guys don't know, recently on July 1st, he said baby Doge do like the baby shark thing, right? But Elon Musk is a big proponent of Dogecoin, and as you can tell, he doesn't really like the idea of Bitcoin because it uses so much fossil fuels. Now, it doesn't mean that Bitcoin is bad. If anything, it's actually moving to more sustainable energy sources. But unfortunately, a proof of work concept will never catch up to something like proof of stake. And that happens to be Ethereum and a few other tokens as well. If you haven't been in the channel, I actually did a video on Cardano very recently that highlights exactly how Cardano works. And one of the things that it does great is that it doesn't use a lot of energy. If you want to go check that video out, I will link it up here at the end of the video. But what about China? So China actually ended up banning Bitcoin in 2013. They also banned Bitcoin in 2017, and now starting to do some enforcement on Bitcoin miners, and Bitcoin miners from that have fled overseas, and some also have sold out. So here's an article from someone that actually left mining from China and is moving it to another country, possibly United States. Now, they are considering shipping their equipment to Texas and Tennessee, as you can see down here. But I might pronounce his name incorrectly, so I apologize. But Yang had about 300,000 computers humming around the clock in 20 specially ventilated warehouses across remote northern China, guzzling enough electricity to power a small city. The sophisticated machines cost hundreds of millions of dollars, and the digital currency they minted was worth even more. As a result of China banning Bitcoin mining, China's Bitcoin moguls are coming to America. And the reason why most of the miners are in China is because cheap electricity exists in China. And now that Chinese governments don't want to deal with Bitcoin and Bitcoin mining, a lot of these people will move ultimately to different countries. Specifically, looks like America happens to be one of the top choices. Now, a lot of people are theorizing that due to this kind of a little bit of rationale from the Chinese government about Bitcoin, which is totally understandable, knowing their political system and how they want to operate, at the end of the day might impact Bitcoin's price in the short and long term. If anything, it might even pump up other projects that are cleaner energy in the longer term, which is no problem if you don't just have all of your crypto money in just Bitcoin. So this is just one of the reasons why it's important to stay diversified even in crypto. Now, next on our list, we want to talk about the Robinhood fee. Now, if you're unfamiliar with what happened, I have a whole video that outlines this, but I'm sure you've heard about users that were impacted by Robinhood's decision to stop trading, especially that of certain assets like AMC, GameStop, Dogecoin, and a few others. Now, because of these outages, Robinhood is having to pay around $70 million in the largest ever FINRA penalty. Pretty crazy. Now, as far as the details go, this is what's going to happen. Robinhood is going to pay $57 million as a fee, and then another $13 million to thousands of clients that were impacted by this. FINRA considered the widespread and significant harm suffered by customers, including millions of customers who received false or misleading information from the firm. Millions of customers affected by the firm's system outages in March of 2020, and thousands of customers the firm approved to trade options even when it was not appropriate for the customers to do so. Now, Robinhood was supposed to ultimately go public sometime this year, but it's probably good that they didn't, because this would have set their stock back really far. At least a 10, 20, maybe even 30, 40, 50% drop just because of this news. So not only is it good that they didn't go public, but also good to get this out of the way and hopefully get it resolved so when they do go public, they don't have this type of reputation down the road. Now, I personally still use Robinhood, even though I don't really agree with everything that they're about. But when people ask me about what platforms I would personally start investing with, I don't always start with Robinhood as the number one pick. I prefer companies like Public, WeBull, M1 Finance. The only reason I would even suggest Robinhood is for the ease of use, which other platforms in my opinion don't have the same, maybe besides Public, because their user friendliness is really good. But other than that, those are probably the go-to companies for a lot of people. Especially when you're starting out, you kind of want a really user-friendly platform, and Robinhood just happens to be that. But based off of that fact alone doesn't mean that maybe they are the best choice anymore. So anyway, moving on to inflation. Inflation, we have seen an absolute crazy year for inflation. I don't know if you're familiar with seeing this chart, but this is just on tradingeconomist.com, and this shows a month-by-month inflation chart. And this obviously seemingly is going up and up and up, and it seems like it's not going to stop. And we'll see what happens in the next month's graph, and I'll probably do a update video on this to show whether it goes up or down, and hopefully it does go down, because looking at past data, you can see here that we haven't seen this type of inflation since 2008. Now, that doesn't mean that we're about to experience, some kind of crazy market crash, because the economy now is much different than it was back then. But it does paint a similar picture to what happened in 2008. Just something interesting that I thought you guys might find also pretty fascinating. So lumber prices dived more than 40% in June, biggest monthly drop on record. Now, those of you who have been keeping up with the lumber prices, you can see here we had an insane lumber rally. I mean, we're talking about from mid 2020, we had it go from 400 and it peaked out around 800, so a double up in price. Then it went back down to 400. We said, okay, great, that's the end of that. And then immediately went back up to 800. Like, okay, it's just gonna go, double top, and it's gonna go back down. Well, because of the shortages in lumber, because of the layoffs that happened, and the thought of the decreased demand that was gonna happen, even though we had an increase in demand, all those factors led up the price of lumber to go to over 1,500. In fact, it got up all the way up to 1,670, which is pretty crazy to think about when you look back when in early 2020 we had a lumber price of 300. Now, it has corrected back down since, and just from this high of 1,670, it has already crashed well below 50% of that, all the way down to 737 at the time I'm making this video. So it's nice to see lumber prices cooling off, especially for those of you who have maybe put off some projects or are looking to build a house in the near term. Now, mortgage forbearance. This is something that I thought would be really interesting because it's so fresh. Now, if you're not familiar with mortgage forbearance, we'll get into that, and then we'll talk about exactly what's happening with mortgage forbearance as we speak. So forbearance is a temporary modification of your payment obligations on a loan. This means reducing your payments or suspending them entirely. Typically, borrowers ask lenders for forbearance during times of financial hardship. As we had the pandemic, the government had to step in and say, hey, we're going to offer mortgage forbearance. And with mortgage forbearance, you pause your payments for a time. You won't be reported as delinquent to the credit bureaus in that time. And during the pandemic, you're entitled to an initial 180 days for forbearance, followed by a 180-day extension, then an additional extension until June 30th, 2021. As you can see, that's a very important date. And at the time I'm making this video, it's very soon after June 30th. Now, this hasn't been updated, but June 30th was supposed to be the last day that you can essentially have mortgage forbearance. So a lot of people are coming out of forbearance as we speak. But luckily, the FHFA actually ended up extending the forbearance through September 30th of 2021. Now, how is this going to impact the overall economy, especially when it comes to the housing market? Well, since we haven't ever had this crazy of a forbearance before, what we do know is that if people don't pay their mortgages and the forbearance ends, then a lot of houses are going to go into foreclosure. And that is very bad for the economy, but very good for investors, because the price of houses will go down because there's a lot of inventory, and the banks, which will ultimately have to take responsibility of those loans, will want to get rid of those homes as soon as possible, which might lead to a small housing market crash. Now, I don't think it will ever be as bad as 2008 because we don't have those sketchy loans that they were doing back then. Now, everything is a lot more regulated, so we don't have to worry about that. But with this forbearance, it might squeeze some investors or even just property owners out of their homes. But again, we'll just have to wait and see how this plays out long term. Obviously, extending it allows people to maybe catch up with their payments, but other people, maybe ones that, are abusing the system, might get caught up with it and, maybe not be able to pay their loans and possibly even losing their homes. Now, hopefully that doesn't happen, but it's just a possibility. And I think with this extension, it could go either way. It could either help a lot or it can make things worse and really build up that bubble of problems to come. So we'll just have to wait and see. And like I said, if you guys want me to make updates every single month or, more frequently, I'm more than happy to do so. But let's talk about something a little bit lighter, and that is the IPO market. Now, traders and investors are hopeful that the IPO market can repeat its record first half. That's what the article is talking about. In the later part of 2020 and early part of 2021, SPACs were the craze and they did super, super well. And IPOs weren't really being paid attention to, even though they performed typically pretty well as well. More recently, we've had some interesting IPOs that a lot of people have been anticipating, and I'm going to talk about some of them today. And one of them happened to be SentinelOne Incorporated. If you're not familiar with this, here is their website if you want to go check it out. And also, if you're subscribed to the channel, which by the way, you should subscribe, I like to do company analysis videos from time to time. And if there's one of these that catches your eye and you'd like me to do a full in-depth analysis, leave it down in the comment section below. But SentinelOne is a cybersecurity startup. And as you can tell, it's a pretty loud company as far as, visually, and you can go check them out if you want to. But this is a new IPO that just came on the market. It's not even 5 days old. At the time you're watching this video, it might be a little bit older, but it started off $44 and is sitting around $40 per share right now with a market cap of around 170 billion. Now, the next one is Figs. For those of you who aren't familiar, this one came out a little bit earlier. It actually has been on the market for about a month, but I thought I should still include it because I really like Figs. And if you're unfamiliar with them, they actually make scrubs. They're a scrub manufacturer. Now, they're not just making scrubs and selling them. They're more of like a Lululemon for the healthcare industry, if that makes sense at all. So I like them. I've made a decent chunk of money on them. I actually started buying them the day that they IPO'd, and it's been doing pretty well for me. Now, the PE ratio is a little bit high, but the market cap is still fairly low. And I think long-term, they have a lot of potential. Now, the next one on the list is Clear Secure, or ticker symbol YOU, and it just came on the market June 30th at $41 and has been performing quite nicely. And if you're unfamiliar with what they do, they're the company that does identification verification at the airports. You're probably familiar with these if you've been to the airport before. Next one on the list is Legalzoom, or ticker symbol LZ. It's sitting currently around IPO price. You're probably familiar with Legalzoom, so I won't dive too deep into them, but here is their website if you want to go check them out. Last one on the list is DNUT, and that is, you guessed it, Krispy Kreme. That just came out at the time I'm making this video, and it's doing pretty well. It IPO'd at $17 and is sitting around 21. And just in case you're unfamiliar with what they do or what they make, these are some of their products that they make. Some of the most delicious, but also some of the worst food for you, obviously not by taste, but by, health consciousness. But they are so well known for their donuts. It's absolutely incredible. They're so tasty. And I know a lot of you guys will like their stock long term, especially with that revenue in 2016 of 500 million. I'm sure that's gone up quite a bit, especially during the pandemic. Anyway, so the last thing I want to talk about is Michael Burry's pessimism on some stocks. And most favorably, he's talking about meme stocks. Now, he does have a short position on Tesla as well, but he's mostly talking about meme stocks and the stocks that, you probably are familiar with, like AMC, and of course, GameStop. He is very pessimistic on these companies for good reason, because these companies, if you look at their price chart, they have gone up and up and up all the way to the moon. Meanwhile, their revenues have actually stagnated. Now, if we were to look at GameStop's revenue, they have been declining in revenue over the last few years. And AMC's revenues are the exact same. Obviously, theirs is even worse because they've had to close down a lot of their locations. Now, obviously, Michael Burry has made a lot of choices in the markets, whether good or bad, but he's more famously known about predicting the financial crash and really the real estate crash of 2008. Now, he was quite early to that, but that doesn't mean he didn't predict it correctly and made millions and millions, in fact, hundreds of millions of dollars in doing so. And when you make a prediction like that and are correct about it, people remember. So that is just something to look out for, right? Just pay attention to AMC, GameStop, BlackBerry, any other stocks that are meme stocks that he is pessimistic on, because maybe he might be right once again. I would love to know what your thoughts are down in the comment section below. If you want to leave me something down there, I'd love to hear from you. And if you haven't smashed the like button already, go ahead and do that for me. And don't forget to subscribe. Lastly, if you haven't checked out the links down in the description, go ahead and do that, because there are a bunch of free money links from companies like Public, Robinhood, WeBull, Stash, and a bunch of others that you can literally just get free money from these companies just by signing up an account and trying them out. And if you don't like their platform, you can always move that money to your favorite brokerage. Without any further ado, I'll see you guys in the next episode. Thank you all so much for watching. Peace out.